Friends, good evening. Today, I hope you all are doing well with regards to the current escalation or war-like situation with our neighboring country. So, be safe, take care of yourself. Follow the drills that we've been asked to follow to stay safe, and be sure to check the situation before you plan to travel, or if you have any trips planned, check accordingly and see if it is a good time and a safe time to travel as well. So thanks for the time taken out to watch my video. So yesterday we have about four companies that declared their results. Based on that, the companies have done well on a quarter-on-quarter basis in terms of profitability, and you will see a high number from low value or penny kind of stocks which have given a very good return and which have led to some good gains that were made in the stock yesterday. So post yesterday there may have been some correction in the prices, but we'll go through those four stocks one by one. The first one is Ratan India Power share price, which shows about 11 rupees and a surge of 9%. So we'll quickly go through. This is the logo of the company. You can see today it's lost 3.5%. Yesterday it was up by about 9%. You can see uh, overall you can see that there is still some positivity with the surge in the price yesterday. Then you can see Ratan India Power is one of India's largest private power generation company with an installed capacity of 2,700 megawatts, thermal power plants at Amravati and Nashik with 1,350 megawatt capacity at each location in Maharashtra, incorporated in 2007. Current price is 10, high of 21, stock price to earnings of 24, book value 8.5, return on capital employed 8.7%, return on equity about 5%, face value 10 rupees, company has low interest coverage ratio, promoters have pledged 88% of their shareholding, which is very high and something that drives a negative sentiment in terms of the stock. Earnings include another income of 357 crores, again another negative, as companies dependent on other earnings to support the financials and the balance sheet. Company has high debtors of 271 days. Working capital days have increased from a minus 134 days to a positive 230 days, which is almost three times the need of its working capital. With that change, you can see sales have been erratic quarter on quarter. So that again creates some sort of negative sentiment. Operating profit you can see is also fluctuating. Same applies to the operating profit margin. So far, March Q4 FY25 quarter has been the best in terms of profitability, and the net profit, which stands at 126 crores, which is a positive after having two bad quarters with just 3 crore net profit in the last two quarters. Then year on year, you can see a slight improvement in revenue between the last 3 years, but that really add up to any sort of uh, doesn't add up to any sort of way of managing the financials. March 2024, you can see another income of almost 11,000 crores. So there must be some sort of additional income from either the sale of some land or some sort of asset which has generated that income. Otherwise, you can see the company has been uh, running at a loss. 2023 FY to 2023 loss of 1800 crores. Again, If you look uh, in FY24 again, if we remove the 10,976 crores, the company is at a loss of about 2,100 crores, and it's given a positive return of 222 crores in the last year. So reserves are gradually improving from a minus to a positive. Borrowings have reduced, which is a good sign in the last 2 years, and still borrowings of 3,600 crores is still high, and the cost of interest payment towards that is also high. So the company would need to find a way to reduce these borrowings, and indirectly it would reduce the interest cost. So you can see here working capital days 229 days, then debtor days high of 271 days, return on equity fluctuating between 8 and 9%. Then we look at Bharat Seeds Limited. It's another company who's hit the upper circuit of 20% yesterday based on the Q4 results. You can see price increase from 75 to 90, net profit increase from 11.4 crores, from 7.6 crores to 11.4 crores, net profit 42% increase from 8 crores to 11 crores. Then we'll just look at some details here. The current price 100 rupees, you can see 11% jump today. Then yesterday it was 90, today it's 100. So mm, upper circuit of 20% yesterday, another 11% today, which is an amazing sign. This is the last 5 days. You can see total return of 33%. Incorporated in 1986, manufactures complete seating systems and interior component for automotive and surface transport. High of 125, stock P 19, which is good, book value 31, which also again is good. Return on capital employed 15%, ROE 18%, face value 2 rupees. Company might be capitalizing the interest cost. Debtor days have increased from 42 to 55, 56. Uh, Company has been maintaining a healthy dividend payout of 20%. Company has delivered good profit growth of 21% in the last 5 years. So you can see PA comparison, stock P ranging from 20 to 56, 57, average median is 25. Sales have grown in the last 1 year, especially in the last one quarter, which is amazing. Net profit has also grown by about 30%, which is again a good sign. Year on year sales, you can see between last 2 years grown at about 10%, and the net profit also increased by about 30% in the last 1 year. Again, a good sign. Reserves have slightly increased. Borrowings have slightly reduced, which is a good sign. Debtor days 56, inventory days 19. Days payable have increased, so companies are taking longer to pay its suppliers or creditors. Working capital days have improved to a minus 10, which is a good sign. Then we move on to the third company, which is Piramal Enterprises. Uh, the stock has surged 8% with a net profit of 485 crores against a loss of 1,684 crores the previous year. You can see this is the logo. The current price about 3% value add in the last 5 days. Piramal Enterprises is one of the leading India's leading diversified non-banking financial company NBFC with assets worth 10 billion with a network of over 400 branches across 26 states, union territories, offering a wide range of financial products and solutions across retail and wholesale lending fund-based platform in investments. High of 1275, current price 1012 rupees, book value 1200, stock P of 47, return on capital employed 6.8%, return on equity 1.81%, face value 2 rupees, company has low interest coverage ratio, company has delivered a poor sales growth of minus 4.7% in the last 5 years. Company has low return on equity in the last 3 years. Stock is trading at 0.84 times its book value, which is the only positive here. Then you can see revenue more or less steady in the last 2 quarters. Some improvement between September and December quarter by almost 20% in revenue. You can see net profit has reduced from 181 crores down to 39 crores, and there has been an improvement in the last quarter from 39 to 102 crores. Overall, sentiment not meeting the market requirements. Year on year revenue, uh, not much of a change in the last 12 months. However, between FY23 and FY24, we saw about a 11% increase in revenue. Uh, you can see profit from financing, and the company made some profit from financing of 380 crores, other income of 479 crores, which is again quite low compared to the previous 2 years. Net profit of 485 crores only compared to a loss in the previous year, and a high profit of about 10,000 crores in the FY23 financial. So reserves slightly increased, borrowings have increased drastically. However, since it's a financing company, so if it is able to borrow more money, it should be able to generate more revenue and should be able to earn more interest from it. So it should act as a positive sign for a non-banking financial company. Moving on, Piramal Enterprises has declared the results, and based on this result, they've announced a dividend of 11 rupees per equity share to the face value of 2 rupees, which is 550% dividend announced, subject to the approval of the board members for the FY financial year ending 2025. So this will be as per the approval from the board of directors. And last company that we have here is Aarti Drugs, a pharma company, 18% surge based on 70% net profit growth. So company's portfolio including API molecules covering therapeutic areas such as antibiotics, antiprotozoal and anti-inflammatory, anti-diabetic and antifungal medicines. Notably, is Aarti Drugs is the largest global producer of fluoroquinolones, tindazole, metronidazole, benzoate, celecoxib, nimesulide, ketoconazole, and ranks among the top manufacturers of metformin worldwide. So metformin is a diabetic drug that is the most commonly used diabetic medicine to reduce your blood sugar levels. So, important disclaimer, friends, all investment opinions and recommendations mentioned are solely those of the respective experts, broking houses, and rating agencies. These views do not reflect my personal opinion or advice. Stock market investments carry inherent risk of financial loss. Investors must exercise their own judgment and conduct proper due diligence. The author bears no responsibility for any loss resulting from decisions made based on this article. It is strongly recommended You consult a qualified financial advisor before making any investment decisions. So let us go through the financials of this. It has corrected today, minus 1.4% today. Overall, 20% value add in the last 5 days. This is the logo of the company, uh, part of the 1000 million Aarti Group of Industries. We've gone through the specialty chemicals as well. Uh, Current price 418 rupees, high of 635, market cap of 3840 crores, book value 136. Return on capital employed 13.4%, return on equity 13, face value 10 rupees. Stock is trading 3 times its book value. Company has delivered a poor sales growth of minus 5.8% over the last 5 years. Company has a low return on equity of 13% over the last 3 years. Company might be capitalizing the interest cost. Dividend payout has been low at 6.11% of profit since the last 3 years. Promoter holding has decreased in the last 4 years, 3 years by 4.3%. Peer comparisons, stock PE of between 25 to 76. So depends on the size of the company. You can see uh, between 2,800 crores to 158,000 crores, which is a huge variation in terms of value and the size of the business of these companies. So median is about 26. However, it depends on the quality of the products and the return on the capital that the companies can generate. So sales, you can see the last quarter has been good, has delivered about uh, 20%, just about 18% the revenue growth. Expenses, operating profit has improved. Then net profit, you can see almost double in the last 2 quarters, which is an amazing sign. Earnings per share about 6 rupees 70 paisa per share. Year on year revenue slight missing the benchmark or missing expectations or not being able to meet up the requirements of the last 2 years, not able to match the kind of revenue. Profit wise, just managed to meet the same kind of net profit since the last 2 years. Reserves gradually increasing, which is a good sign. Borrowings have increased or increasing again, so something that the company needs to look into. So friends, I think that is all about it today. Just one final ratio here. You can see debtor days have increased, inventory days slight reduction, cash conversion cycle has also gone up, working capital days requirement has also gone up. So maybe company needs to improve certain ratios here. Overall return on capital employed has been gradually declining year on year. From 21% is down to 13% in the last 4 years. So something again the company needs to look into. So friends, thanks for watching the video. Please share this with your friends, family and associates. Please leave valuable comments below the video so I can make necessary improvements to improve the quality of the video. Also, please take care of yourselves and be safe. Check the situation before you venture out of your house. Thank you. Thank you. Wish you a happy week ahead.